Okay, we are live. How's it going?
I'm good. How are you?
Busy day, man. Busy day. Um, yeah, it's been a while since we talked. I was I remembered going on setting up, and I was like, wow, I feel like I haven't done this in so long. But
Yeah, it's been like we had hymns, and of course we had the earnings call that we covered live on Monday, which is our normal time, which is why we didn't have bootleg then. And we talked about it. And it's like, man, it'd be too much just with what you had going on, with what I had going on, to do bootleg on top of that. We're going to talk about a lot of things tonight. We'll talk about the market and why it's going down, and I know the reason why. It's because Tevis has been buying. I know it. We'll, of course, talk some hymns. We'll talk Tesla, I think, is a good topic. NVDA had earnings this week. PayPal had Investor Day. And at the end, as always, guys, we'll get to your questions. But some of those may be very rapid fire. It's actually my favorite part. And some of them might be, I don't know, because that happens. And maybe about 45 minutes in, I have a very special announcement to make. So remind me, Tevis, and remind me in the chat, guys. You'll see it drop live on X at that time as well. So it's exciting.
Whoa, that's exciting. I mean, I already know what the announcement is, but it's exciting for everybody watching for sure.
Yeah, I mean, it's still exciting for me. Like, it's awesome. So
it's it's a big announcement. First of all, do we want to very quickly take a look at how good old Job's performed today?
Yeah, sure.
JOBY just had their fourth quarter earnings call, everybody. Let's see. Well, first of all, let's see how it's trading. Let's start there. God, hold on.
As a reminder for those, as he's pulling it up, we on the SoFi Weekly team, at the end of the year, we do what's called a gift exchange. And basically, it's $100 of a stock. We're going to change the rules next time. It's going to have to be a stock that you own at least $1,000 of. But we try to give a good gift, usually, unless your name is Tanner. Tevis tries. Like, he doesn't succeed always, but he tries. And Tanner gave Tevis a big fat lump of coal. Now, I was blessed because last year I gave Robinhood, and it worked out. I ended up winning that competition. This year, Tevis, myself, Chris Haggard would have all given hymns had we had the opportunity. I was the one with the opportunity. So hymns is, of course, winning, leading the pack, even with the pullback. But how's JOBY doing, Tevis? You want to throw that up?
All I'm finding on JOBY is them reporting on their cash position, but because I don't know what their analyst expectations are. Honestly, is this a pre-revenue company? Because I think it might be.
It is, yeah. It's basically biotech in the air.
Yeah. I was like, I can't find the revenue, and neither can they, apparently, because
no, it doesn't. They don't have meaningful revenue. So this is a lot like investing in a biotech. Where to be fair to Tanner, there is a chance. It's either going to do absolutely nothing and go to zero, or it could 10, 20, 30, 40, 50x. And if my suggestion for people that want to bet on companies like this, do it with a small percentage of your portfolio. I won't talk about it much today unless there's questions on it. But AbCellera reported earnings, but it's earnings. It's biotech. So biotech actual clinical approval of their products. And so they do have some revenue, and more than JOBY, a lot more than JOBY. But the first slide always in those companies, like JOBY, like AbCellera, is that cash pile, because the cash burn and the runway are important.
All right, guys, we're going to go through good old Job's here. JOBY reports record certification progress and delivery of second aircraft. Wow, congratulations. U.S. Air Force. This is yesterday when they reported earnings. Record progress on stage 4 certification. They built a second aircraft, ladies and gentlemen. So they doubled their aircraft supply. They plan to carry first passengers in late 2025 or early 2026. You hear that, Tanner? So we're not approaching it pre-profit. We're approaching it pre-revenue. So playing the really long game. More than $1 billion of additional funding and commitments made in the fourth quarter. From what I've been seeing, they look to have a fairly solid cash position.
They do. They're fine.
We made record progress on the 4th of 5 stages required to certify our aircraft for commercial passenger use in the US. Wow. We expect type inspection authorization flight testing to begin in the next 12 months. JOBY delivered a second electric air taxi to Edwards Air Force Base during the quarter. This is the aircraft that they delivered, you can see here.
And honestly, so like it's not necessarily that it's bad. It's just so early. Like there's no way that this works out, barring like one of those where people are just speculating on names like we had in 2021. That can happen. Right now, it doesn't feel like it can happen, but it can.
We received more than $1 billion of additional funding and commitments in the fourth quarter. So that's just Q4. They received $1 billion. First company to fly an electric air taxi as part of Korea's KUAM Grand Challenge. Mr. Joe Ben Bervert, the CEO and founder, said the sector-leaning progress we made throughout 2024 puts JOBY in a great position to capitalize on opportunities presented by America's renewed focus on innovation and manufacturing. As well as delivering record progress on certification, we scaled our manufacturing, delivered 2 aircraft to the DoD, flew 561 whole miles with a hybrid hydrogen electric variant of our aircraft. Wow, I did not think it was going to be hydrogen based, but all right.
And you don't own any of these shares or anything.
I do not own any of these shares. The next 12 months mark a critical inflection point, not just for JOBY, but for our entire industry as we look ahead to carrying our first passengers. And I'm proud that JOBY continues to lead the way towards this new era of flight. Step aside, Archer Aviation. JOBY is leading the way. JOBY ended fourth quarter with $933 million in cash equivalents, and investments in marketable securities. This does not include the expected $500 million investment from Toyota to be made in 2 equal tranches of $250 each. All regulatory approvals are now in place for the first tranche of this investment to be made. Great update from JOBY, the quarterly update. It's going to be an interesting 12 months to look at their progress to see if Tanner is going to make some money on this. JOBY is currently down year to date, unfortunately for Tanner. Let's just take a look. They're about 17% down year to date. But I mean, that's for a good old JOBY, they can make that up really, really quick.
Honestly, that is true. Like that's not even being facetious. So, and HIMS is just up a little bit more than that, right?
And HIMS is just slightly up a little bit more than that. Cheers to Buying Celsius, who is sponsoring the podcast unofficially. HIMS is up. HIMS is up. Let's see. HIMS stock.
Yeah, so HIMS, we'll talk about HIMS here in just a second in the earnings.
Slightly higher than good old JOBY. 64% year to date for HIMS. I mean, it's a far cry from the 150% year to date that they reached at the peak, but it's also not minus 17% year to date either. And funny enough, Roy, the S&P 500 just turned red year to date. I think it was today actually that happened. So HIMS is crushing it out there.
Yeah. S&P 500 is down from its peak, a little bit less than 5%. It is down in the negative year to date. The NASDAQ, which is a little bit more volatile and has a little bit more heavy tail on the tech names, it's down 8-point-something% year to date. Not year to date, from peak. And I think it's important for maybe we'll start with the macro in the market. If this is if you're new to investing, if you're new to trading, these things happen every single bull cycle. No, not bear cycle, bull cycle. That you will get on average of every about 2 years a 10% pullback. Well, that's a correction at that point. 10 to 20% is a correction. Above 20% is a crash. I don't think we're heading to a crash. We could see a correction in the NASDAQ certainly, but also the S&P 500. wouldn't be too shocking. There's not always, like, you always point to and find reasons for it. I think that there's some reasons in the market, but I'm kind of curious, Tevis, like, what do you think as far as why is the market down year to date? Trump being elected should be good, and regulatory clearance, and with the Ukraine possibly doing a ceasefire, Israel as well. Energy prices are lower. What's going on?
Why is the market down?
Mm-hmm.
I mean, I don't know, man. Like, I think there's macro reasons, and then there's technical people will argue on the technical side as to why it's down. I'm sure with the whole tariffs, the EU tariffs, they didn't really help things. There's a lot of pressure on that front as well. So yeah, I mean, the market had a fairly hot start to 2025. And then, yes, this too, all the news that data points to recession, that doesn't help things either. Do I think we're going to bounce back? Absolutely. Like, I think if you were to stack rank the negatives that we have over the next 12 to 24 months versus the positives that we have over that same time period, I think ultimately the positives would win out. But there's many things that spook the market over the short term, and this time's no different, right?
Yeah. And there's you can look for reasons. Like, I think that Sigig had part of it, and Michael Anthony as well. I don't think it's really pointing to a recession, but there's a little bit of weakness. So jobs numbers came out, and they're a little bit weaker. Unemployment came out. It's a little bit higher than expected. Earnings are actually pretty good for most companies. They're not expecting a recession or anything like that. But I think the biggest factor, so that's contributing, certainly.
Yeah.
I think two other factors are pullbacks are normal and healthy in any market, even the most robust market. And the other big factor is Tevis is buying. And it just, the buying pressure no, I'm just kidding. But no, it's uncertainty, honestly. So the way that Trump is governing and leading, long term, I think that a lot of what he's doing, maybe not tariffs. I'm just not a fan of tariffs. But the other stuff is actually pretty decent and good long term, especially government cuts. But there's a lot of uncertainty as far as what that looks like, how aggressive that is. The tariffs, it seems like one moment no tariffs, and then 25% tariffs, and then something changes. And what that does is it puts us in an environment where there's just a lot less certainty as far as what the near-term picture looks like. Now, long-term, I think everybody's kind of lined up and saying, yeah, things will be pretty good. But in uncertain, more than anything else, even more than negative, really bad catalysts, the market hates uncertainty. And so I think it's just kind of reacting to that, and it could continue to react for that a little bit as well.
That is absolutely a possibility. So what is that thing? Like, is there a specific catalyst that we should be looking out for to provide more certainty to the market that it's clear skies ahead? Or is it just like the market cycle and the news cycle are very short and it's just a blip that's going to go away?
I think that's part of it. Is it's short-term attention span, short-term trading, traders being traders, that sort of thing.
Yeah.
I think keep an eye on those economic indicators. As long as they don't really, really sour dramatically, I think we're okay. A recession is, I think, very unlikely still, but there's always a possibility. There's two actual indicators that I think are kind of interesting. Ooh, I had it. Hold on one second. To look at. One is actually quite positive for the market, but it's always worth looking at these two, especially when you're looking at international companies and the strength of the dollar. Actually, look at the 1 year, if you don't mind putting this up. So the first of these is the DXY. This is the US dollar measured against basically a basket of currencies. So instead of looking at US dollar to yen, US dollar to Brazilian real, Canadian funny money, monopoly money, whatever, it looks at it as a whole, as an aggregate. So 100 is basically neutral. So 107 means that the dollar has been stronger against other currencies. And if you were new to this, if you've never seen this before, you might be like, oh man, strong dollar, that's great. No, not for U.S. companies, not for exporters, not for U.S. companies that do a lot of business overseas. It's one of the reasons why, if you're looking at one of your favorite companies, if they have much overseas exposure, they'll report in dollar neutral terms. And so as the DXY does well, and you can see it, it's not up at its peak. That was near just after the beginning of the year. It's come down a little bit, but it's still certainly elevated. So that's not doing us any favors. Now, on the other side, this is pretty interesting. The 10-year yield, we can see here closer to that same time when the DXY had spiked. And there is some correlation to these charts, but it's not a one-for-one. Then the 10-year yield itself spiked as well. We did see it drop way down here in those initial cuts when the Federal Reserve did that. And there's a number of reasons why the U.S. 10-year Treasury drops. But one of those things that is really helping is that the United States is actually taking somewhat seriously their role in actually having a balanced budget, or at least making some cuts. Now, not enough has been cut. A lot more needs to, and there's a lot of steps in that. It's a long-term process. But as this 10-year yield goes down, mortgage rates are tied to this. And so one of the biggest areas of weakness in the United States economy, because there's not a lot of them that are weak, is real estate. And it affects and impacts a lot of jobs and a lot of people, a lot of home buyers as well. And so this is actually one of those things where you wouldn't know it from the price action in the market. But as this goes down, especially if we get back here into the mid threes, that's not going to give you a mid-3 mortgage rate, but that might give you maybe 5% or so, depending on the spread. That's really, really bullish and really, really good. So it's something that useful to keep an eye on. Now, there are some of the reason for this, and it's not all the reason, are economic indicators that were mentioned that, I don't think point to recession, but point to maybe just a little bit softer side of the economy. So there's good news, even though it doesn't feel like it right now. And I'm just kind of curious if you guys are in the market, how many of you are like down or flat year to date? I'm up like 5 or 6% only, which is like, hey, that's great. No, I was up a lot, like 2 weeks ago, 3 weeks ago. So, it's close to like 50% year to date. So it's quite a drop, down at this point. And some hedges paid off, but man, it's tough. 8% year to date. That's tough. Yeah. If in doubt, Chai, I don't know if I'm saying your name right, but or Kai, if in doubt, zoom out. That's a good thing to do, in your own portfolio as well. As he's certainly saying it for names that you're invested in. But if you've been investing for the last couple of years and you're like, oh man, this investment thing is not working out and you're having nervous jitters, it's okay to spend some time away from looking at that screen. That can be helpful. And also look at where you've come the last couple of years. If you're like having some uneasiness with the way that your portfolio is performing, it's always okay to reevaluate your thesis and say, well, maybe I can't stomach as much volatility as I thought, or I need to start taking gains more aggressively next time. Learn from it. I got burned badly in 2022 because I was new to individual stock investing. I'd just been doing it for like a year and a half. And at that point I was like, man, I don't know. Other than buy Palantir, and that worked out really well long term, but in the short term, it did not feel good.
Yeah, I think you and I are somewhat okay because we have HIMS as a concentrated position, which has carried the rest of our portfolio a little bit higher. But then I also own Tesla, which is not like it's counteracting HIMS.
So which of those two names? We want to talk about both of them. Which of those two names do you want to start? The good news, or well, I guess they both are down, but
we can start with whichever, man. We can start with the Tesla stuff. I want to throw up a post here that I made, and I want you to react to it because I got some pushback on this post. And I apologize for being low energy tonight. I'm just tired. So let's throw this. Okay, so Deep Value Bagger, good resource on X, posted saying Tesla's going through the third largest drawdown in 50 days since December 17, 2024. So you can see the drawdowns here in terms of percentage, and you can see the duration of drawdowns. Of course, 2021 was like all year. was essentially the drawdown. And then I commented And I reposted this and I said, look, serious question. And this is a little bit facetious. It's a little bit tongue in cheek, but I said, where do you think Tesla currently ranks on Elon's mental list of priorities? And then I put my ranking. I said, number one is obviously Doge and politics. Number two is Grok 3 and beating Sam Altman. Number three is ramping up X profitability and taking payments. He's talking about more states approving payments. Number four is SpaceX next launch window for Mars. That has a finite time duration. And then this is me being facetious on the baby mama drama. And then I said Tesla, Optimus, and FSD development. And you had the comments, some people were like, yep, nailed it, absolutely. And some people were like, just sell your shares if you don't like it. And I was like, guys, this is what I've been saying on several of these podcasts now for a while around Tesla's success or failure is really correlated with Elon's attention on Tesla, how much he hyperfixates on Tesla. And yes, I understand that every year that passes, that the company executes more and produces more, that will get slowly decoupled over time. But it still has a very high correlation, especially when you're talking about new product lines such as Optimus, which are basically 0 to 1 type of developments. He is really, really good at that. It seems as though most of his attention is going here or here, right? Doge or Grok. And Tesla, unfortunately, is going to suffer as a result of that, because Tesla has missed, 5 out of the last 6 earnings reports in terms of their numbers, top line, bottom line misses all across the board. Their growth has really plateaued. And then the only reason it's still up is because Elon will hop on the earnings call saying that it's going to be the biggest company in the world and you have no idea, and just straight up, pumping it. And I don't mean that in a bad way. I think he genuinely believes that. I just think that we as the investor base don't really see him to the same degree dedicating his time to Tesla, because I remember way back when all he would post about was Tesla. He would retweet random accounts on Tesla. He would retweet the Tesla marketing accounts. All he would post about was Tesla. And now maybe one post out of every 50 is Tesla related.
Yeah, it's definitely not top of mind. And I know that you'll get pushback if you ever say anything negative about Elon Musk on Twitter. It's just going to happen. But not everything is good with Tesla. There is one thing that I don't think we talked. Well, we hadn't had Bootleg since then. And I don't know that we'll do this as a full topic, but have you tried Grok 3 at all?
Grok is amazing. I'm using it every single day now. I haven't touched ChatGPT since Grok 3 came out. Honestly, I'm using it every single day.
And Dee mentioned, that originally it seems like that was well integrated with Tesla, the AI component. That was always a thought, and now it seems like it's spun off, but it's not fully spun off. One of those things that Elon Musk mentioned a month or two ago is that they're looking to integrate Grok into the Tesla. Now, previous Grok, I was like, yeah, it'd be a little upgrade. It's nice. Grok, I agree. I've drunk the Kool-Aid at this point, and usually I take the Elon hype stuff with skepticism. Yeah, it's probably not quite as good just because people overhype it because of Elon.
Yeah,
I tried it though. I pay for ChatGPT. I use ChatGPT almost every day. My wife uses it every single day of the month. Yeah. She is impressed with Grok. She's like, man, this is really good. She's not ready to get rid of ChatGPT yet. And same, we have a lot of stuff that's stored on there, and we need to make sure that Grok is right for the integrations that we use it for. But that said, I'm using Grok actually more than ChatGPT right now. It is a phenomenal product. And when that gets into the actual Tesla, that is a differentiator. It frankly is. Now, it's not as big a deal as full self-driving or the cyber cab robotaxis, all that stuff. But it's still one of those one nice little bit of feature. Now, earnings were not altogether bad, but we have we know what this kind of company drops as far as numbers. Of course, we have weekly Chinese insurance numbers that come out. Those are okay. But this right here, if you can share the screen. This is from Charter. It's owned by Robinhood, by the way. So you own a piece of this, Tavis. Congratulations. But Tesla sales dropped 45% in Europe in January. So January new car registrations. This is the lowest it's been since, I believe, either 2020 or 2021. And you can see how much of a drop Tesla has had versus other companies. And this SAIC, by the way, is Chinese manufacturer, I believe. So why do you think the massive drop? There's a couple of reasons, I think, but why? What's a reason you would think that Tesla dropped that much in Europe?
I mean, it's just the brand damage, man. We've been seeing so many images of like people, drawing swastikas on cyber trucks and on supercharger stations and just graffitiing, anti-Elon uh, sentiment stuff on Tesla products to the point where Tesla literally was like, we are going to pursue legal action against these individuals. Because like Elon responded to somebody yesterday, and I would scroll to find it, but he like tweets like 100 times a day. But he responded to one person who basically did that exact same thing. And he was like, Tesla's going to pursue legal action. Like it's gotten to that point where like the company is going to pursue legal action because of the brand damage that Elon's own politics have caused.
Yeah, and I don't think that's like the whole explanation. I think I don't know like where the divide is. Like my feeling is like half of this is probably Elon specific and some pushback against that. Some of it's very unfair, like the media portraying it as, and I'm not even going to do it because I don't want to. But the Nazi salute thing is like he's just awkward. I don't think he was doing that at all. He'd be the worst Nazi ever because he's had babies with Jewish people. So he's definitely, he helps Israel, and just it doesn't make any sense. But some of it is legitimate criticism. People don't like, the way that Doge is happening or him helping get Trump elected. And he's been very, very vocal with elections in Germany and all sorts of things. And so I think that's caused some problems. There's also weakness in the economy for Europe as well. And so Tesla is kind of a luxury item at the price level for a lot of Europeans. And, I think that the other factor, I had one other. Elon. Oh, yeah. No. I don't know. I made a post on it. You can look at the post. Maybe it's. Yeah, Y refresh. That's it right there. I was like, man, there's something big. So the Model Y, of course, is coming out. It's not too shocking when your big seller, your Model Y, is, hey, the old one is kind of out the window. They're still selling off some, but mostly they're selling out that inventory, and then they're ramping up the new Model Y. And so some of this is to be expected. I'm personally guessing, around 25% of the reason of that. I still think the Model Y will do well in Europe, but there is some brand damage. And it's interesting. So S&P 500 returns year to date. This is really bright, and okay. So I know you can't see this at all, but if we scroll all the way down, Tesla is number 501 out of the S&P 500. It's like, no, it's not below but it's the fourth worst performer year to date. Does this remind you of any other year?
Boeing? Oh, of any other year?
Yeah. Last year, right?
Sure,
Last year at this time, well, actually a little bit later into the year, Tesla was one of the worst performers. Boeing was right there with it. Oh, and of course, we know how Tesla finished up year to date. So part of it too is, as far as the performance, it really rocketed up, with the election. And so right around the first of the year is close to when it peaked. And so we shouldn't be surprised from a pullback as well. Now, have you changed, trimmed, added to your position at all, Tevis?
No, but I do want to show you this. Hold on. I'll talk about that in a second. Just supporting your point. I saw this post. 2020 versus 2025, it basically hits the 200-day moving average and then it bounces to all-time highs. I mean, this is hopium for a lot of people, I guess. But we'll see if it follows this trend. But yeah, it's stuff that's happened before. This is an incredibly volatile name. I like this post from Sawyer, I think it was. I'll try to find it, where he basically talked about like the number of times that Tesla has had similar. Yeah, here. Let me throw this up. So Sawyer posted this on X saying, Tesla's a volatile stock. It's always been that way. This table represents the monthly returns for Tesla, as well as the total yearly returns at the end of the year. So you can see like 2020, these are monthly, right? They make like hymns paling by comparison with a lot of these results here. But then you can see 2022, like almost all the months were negative. And then 2023 picked up, and 2024, obviously, we know the last 2 months, November, December, were great. But it seems as though that's pulling back a little bit just with Doge and with commentary around the European elections and so much more. But you can basically see that there's not many months where Tesla doesn't move quite a bit, so that's just, it comes with the territory.
Yeah.
As to what I'm doing for my position, I wrote today. Okay, actually, let me throw it up because I think somebody asked us, did you buy anything today? So I wrote cash secured puts on Tesla expiring not this Friday, but next Friday. So whatever that is, March 7th, I think, or yeah. So we'll see if those get hit. I wrote those for 285. So basically like at the money in the morning. And then I had meetings and stuff, so I couldn't really follow them along. I think Tesla closed at like 281, 282. So we'll see where it goes. But I basically I think in a week, it's more likely to be higher than here than lower than here. Because if it's lower than here, then it's broken some key support areas, and it's going to be like much lower than here. In which case, like it wouldn't have made a difference for me if I put 275 versus 285. Because if it broke the supports, it would just go straight to like 240.
Yeah, I think that I think that we're probably likely to go at that point, but
yeah,
usually like RSI, where is RSI? Let me just pull it up on my phone real quick. Usually relative strength index, and usually when it's this oversold with Tesla, it gets a bounce. RSI is currently at 25 on the daily RSI or 14-day RSI, which is quite low. Doesn't always mean that it's going to bounce, especially if the broader index continues to sell off. NASDAQ sells off, it's going to be impacted. That said, I haven't sold any cash secured puts on Tesla. I've not bought any more. I've not added. I don't plan to unless we have a pretty good discount. But I think that there has been legitimate brand damage, that it's not the only reason why the stock is selling off. It's not the only reason why that it's sluggish in Europe. Europe is a pretty small market compared to it's not insignificant, but it's a lot smaller than China. But I'm still a bit concerned as a shareholder. And that doesn't mean I'm selling out my position or anything like that, but it's painful.
On that brand damage point, I just want to add, Canada is really, really weaponizing tariffs against Tesla specifically. I know tariffs got pushed to April the 2nd, but literally every single politician here is like, hey, we're going to get 100% tariffs on Tesla. I think at this point, it's not even a point of debate. It's going to be a foregone conclusion that the moment tariffs hit April 2nd, or if they get pushed again, we don't know. But basically, the moment tariffs get hit, retaliatory tariffs are going to be put on Tesla 100%. So basically, you can forget seeing any new Teslas, here in Canada driving around. Oh, yeah. And that is a point where, I think it's spurred on by the media because, all right, Elon's super socially awkward and he stumbles and makes a fool of himself sometimes in social situations, but the media weaponizes that against him as a way to hurt the Trump administration. I saw this thing where it was this video of him abandoning his kid on stage, and it was just super deceptively edited where they cut out the part where he turned back and then got the kid. And they were like, look what Elon, and it's just, so again, I'm not trying to sort of blindly stand up for Elon because I'm a Tesla shareholder and I do agree that hey, his attention has diverted and the brand damage is absolutely hurting Tesla shareholders. But I'm also saying that the media also plays a role in making that look worse than it is, which also doesn't help Tesla shareholders.
Yeah, and it's frustrating. It's like all the tech, all the long-term opportunities are still there. Now, the Canadian 100% imports, it's pretty ridiculous because Musk is actually anti-tariff. He's not in favor of tariffs at all, and it's like, okay, we're going to hit him anyway with whatever. I think the danger as well. Trump has talked about a 25% tariff on the European Union. Said some very negative things about the EU. And so I don't think that the bad Tesla numbers from January are going to get better in March, because we're here at the end of February. I actually think that there was very likely going to take some things out of the same playbook of Canada and be like, okay, fine. Well, I don't think it's every country. I don't think it's a whole EU. but it wouldn't shock me if a good number of them just say 100% tariffs on Tesla. And that's bad. It's not good. It's a different kind of key man risk than we were talking about last year. So not everything is gloom and doom, but I'm going to wait probably with the position that I have. If we fall a lot, like if we fall in the hundreds, which I don't think that we will, but we might, especially if we have a bigger pullback than I expect, maybe.
Yeah. And like, I think, just addressing some of the comments here, like, I'm just saying it from the frame of being a Tesla investor, these are not good things. I'm not saying, okay, I agree with this stance or I agree with that stance, like picking apart individual topics. As a Tesla investor, it's all bad, because there's no real good press there. I think like we need a lot in terms of the actual numbers, the financials, and the business tailwinds to overshadow a lot of this other stuff. And because we're not getting any of that other aspect from Tesla specifically, then this stuff becomes the main sort of conversation topic. But yeah, it is what it is. I think for myself as well, like Tesla, like I've been holding it for quite a while, and I view it similar to Bitcoin, right? Like it can have some pretty sick drawdowns. But if you zoom out and look over the long term, like the company is still performing. Of course, that stance, as I mentioned, I mean, I think we had a full stream on Tesla, has changed somewhat. I think this is probably like the most bearish I am on Tesla. But even that is like me going more to the neutral side of that scale, not like turning fully into like a short and selling my shares or whatever. I'm not really doing anything with my shares in the 300s. I am doing cash secured puts in the 200s because for my wheeling portfolio, for example, it lowers my cost basis, right? Because I did cash secured puts in 300s, and I'm like, okay, well, if I get called, then that's great. If I don't get called, then I collect $12 worth of premium. Thanks.
I mean, yeah, that's a nice thing about cash secured puts. If you don't mind to own it, like never sell puts on positions you don't want to own. But if you want to own it anyway, you're fine at the price, do it. If you know what you're doing. So NVIDIA is our next topic. So let's go ahead and pivot there, and then we'll get to that announcement. So wow, it's actually fell a little bit further than I expected. So let me share my whole window here. We'll kind of go through not like the whole earnings or anything, but just a couple of notes.
And we will maybe we talk about PayPal, because I know in 5 minutes we're gonna stop the stream to like highlight the announcement.
Yeah, you want to talk about PayPal first, and then we'll do NVIDIA after that. And
yeah, I think that's going to be like a more meaty topic.
Okay. So PayPal Investor Day hit, and let me pull up the stock. Now the whole market is selling off. So this is not just a PayPal thing, but this is like earnings miss aggressive sell off in a name that is trading at a ridiculous valuation already for price to free cash flow, the amount of buybacks, the growth that they are doing, long-term growth that they actually guided for. And it's down just in the past 5 days, almost 10%. Year to date, it's down about 18%. Part of that was quarter four earnings were not like the best. They were okay. It seems like we're in store for a second transition year. It makes sense to go from 90 to probably not that much, but to mid and low 80s. This right here is just really aggressive. So PE ratio, this is current PE ratio is under 18. I think it's like 16 or 15 for next year. Price to free cash flow yield. I've not even done the calculations since it was trading up at $80, but it is attractive. It is juicy. They're buying back $6 billion worth of their stock, and their market cap is $70 billion. That's in 1 year. Like they're buying back close to 10% of their freaking float, and they have $20 billion of cash lined up for buybacks. On top of that, if they had done no investor day, it'd still be ridiculously attractive. But let me pull up maybe just one. I'll pull up one thing here. So I liked this slide, and they had a lot of information on the slide. And it's worth going through if you're a PayPal investor to just kind of look through what they're building. One of the things that they mentioned, which the market was excited about for like 2 seconds, and then its attention shifted to something else, was Venmo is scaling from where it's at, which is decently sized to $2 billion revenue in 2027. 2027 is not that far away. That's a lot of scaling. And the craziest thing is Venmo used to be run, it's PayPal under the previous ownership, Dan Schulman, not ownership, leadership. They basically are like, hey, let's acquire a whole bunch of companies and not integrate them well and put them in different buildings and not have them communicate, and even have crazy things like Venmo competing for checkout with branded PayPal at a lower rate. And it did not make any sense. It was so bad. And there's a reason why PayPal really peaked and then went down, and that's very deserved. What's shifted now is they're basically going from caring about only the top line money and the number of active users. That was like it for Dan Schulman. If you look at 2021's Investor Day 4 years ago, the last time they had it, all about active users, all about top line revenue. They had a few other numbers there, but that was the whole focus, which is crazy to me because it's ignoring the actual bottom line. Like, okay, great, you had great revenue and it grows well. That's awesome. Are you actually making money? And PayPal wasn't. For the longest time, their free cash flow, let me pull this up, was absolutely stagnant and flat. Now, free cash flow is not everything. Whatever. Here's PayPal. Free cash flow. Key cards. Why can't I find? Here's the cash flow. Okay, so we'll do it on a yearly basis so you can even get a bigger look here. So operating cash flow and free cash flow. You can see here that, yeah, they did well in 2020. COVID really helped with that. 2021 went down. 2022 it was slightly up. 2023 really cratered. And that's despite them divesting from certain products and selling their buy now, pay later loans. It would have been a lot lower otherwise. They actually would have been probably closer to 2019 numbers and heading in the direction of 2017, which is about 2 to 2.5 billion. Alex Chris comes in and is like, hey, we actually care about the bottom line. So if we are subsidizing accounts just to prop up those active user numbers and it's not translating the bottom line at all, we got to knock that nonsense off. We have all these silos that we've built, and instead they've launched what's called PayPal One. They're basically integrating everything in a single tech stack. That will take time. They are working on it. They already have some products on there as well. They're not competing with each other. It's like one PayPal instead of like 18 facets of PayPal that don't communicate, don't work well. And you even have like different sales teams. Like you'd hear from the PayPal sales team, and then the Venmo sales team, and then the Braintree sales team, and then the value-added services sales. And it's just like, oh my goodness, guys, no, this isn't it. So his work basically translated to actual transaction margin dollar growth, which is net dollars. Free cash flow is, posted at nearly $7 billion. And this number, by the way, sometimes free cash flow can include things like, oh, you sold off a large chunk of your business, you sold assets, whatever. There was none of that in 2024. That just wasn't what happened at all. So this is actually real. And going forward, they guided for at least $6 to $7 billion in free cash flow, $6 billion of buyback. And that free cash flow is going to continue to accelerate year after year. So let me go back to that one screen. I lost it. So give me 1 second here. If you throw that back up. Okay. So the nice thing about Investor Day is they guide conservatively. PayPal, whether you like it or not, that's how Alex Chris does. That's how his team does. They don't miss as a result. They probably are actually more conservative in their guidance than Anthony Noto. So 2024, they hit 5%. 2027, they're looking at greater acceleration, but long-term ambition is a 10% plus. This isn't top-line revenue. This is actual net dollars, transaction margin dollars. And there's a lot of reasons why that they go into details of, but like this is PayPal saying this. Now, if this was like Hims, well, maybe they're pretty aggressive, or another name that guides more aggressively and sometimes misses. Like maybe this is PayPal that's trading at a ridiculous valuation, but the market doesn't care about long term. They just care about the next couple of months.
Yeah, and I think Investor Day was obviously something pretty large. I think this here is also something pretty large. I don't know if you had a chance to check this out, Roy, or not, but let's play this together.
It's an honor to have you on here.
Oh, it is so good to be here, and thank you. I've been waiting for this and looking forward to this for a while, and I feel like we've got to clear up a couple of things. First, a huge congratulations on your 20,000 followers. I'm very excited for you. And second, just so that we don't get any questions afterwards, I think we need to confirm that you and I are not brothers.
Correct.
There's no relation, but again, it's really exciting.
Yeah. So full interview will drop tomorrow morning. I'm hoping to do it about 10 a.m. Central Time. I've got some more editing work to do. I had a little too much light on me. There's a couple little things that I need to remove. The great thing is, like, the legal team took a look and they're like, hey, run it. It's good. Alex Chris wants to get it out. I'm like, all right, let's do it. So, and there was nothing. I had a whole bank of questions. Didn't have time to ask all of them, but they didn't say anything was off limits at all. Like, he answered every question and it was awesome. And it's like really refreshing and nice to talk to Alex. First time actually doing that, other than, just a couple of little messages for clarification on Twitter that you guys see. But he was very honest, and he is a very honest guy, very down to earth. And so I even asked him at the very end, like, what's with the price action? Like, I know you're the CEO, you can't comment on certain things. What is the market missing? It seems like that there's this disconnect. And he gave, thank you, Kelly, that's really nice. He gave a very honest and refreshing answer that most CEOs don't talk that way at all. They're coached to speak a certain way. So refreshing and awesome. So hope you guys enjoy it. It's about 26 minutes or so. So yeah, it's going to be a lot of fun.
That will be a lot of fun. And it might be the thing that gets me back into having some interest around PayPal again. Because look, I think the way I see PayPal right now, and this is the question that I really wanted to ask you, was, do you see it in the same way how, yourself and Amit and a couple of other people, Arnie, were talking about Robinhood when you were like pounding the table because you were like, they have their entire market cap in cash. Like, it's all, like, you have zero risk. Like, it's that disrespected by the market. Like, is PayPal at $70 after they reported earnings, after they had their investor day? Is it that level of a no-brainer buy, or how are you seeing this?
So there's a real chance of opportunity cost with PayPal. I think at this price range, that's the only long-term risk. Now, if you need money like in the next year or two, probably don't invest it in stocks, because there is a risk to that. But if you're looking at like 5 years out and further, I mean, there's no guarantees in the market. Maybe the US has a civil war and blows up, or aliens invade. Like, who knows? COVID 2027 hits us hard. I don't know. But barring any black swan, it's just tough for me to see PayPal not do well. And I actually think that it'll get to all-time highs by 2030, based on what they've showed in Investor Day. I've thought that before. I wasn't certain. Investor Day dropped, and then I asked some follow-up questions. Yes, I asked about advertising. Would love to ask a little bit more, but we had a limited bit of time. Didn't get to ask my questions on Venmo. I asked about Fastlane. What he talked about Fastlane is amazing. I did ask about the stable coin and the digital payment rails. What he said was very exciting to me too. They have a great long-term plan. So yeah,
so once again, tell people when this drops and where they can find it.
Yeah, it's going to be on my channel, guys. Aiming for 10 a.m. I haven't scheduled it yet because I got some more editing to do, but 10 a.m. Central Time, so that'll be 11 a.m. Eastern Time tomorrow. I'll also post some clips on X just to drive some people out that way. And I'll say one other thing too that I didn't mention in the video. PayPal actually invited me to their investor day, so I had to turn them down. February was a difficult month to get away from my responsibilities here, and I have other responsibilities. This is not my full-time thing. It's an enjoyable element to my life, but yeah, I couldn't make it. So if you're upset that I didn't get the invite out there, they offered, and I just couldn't make it happen. So next time they have an investor day or something, maybe we'll see. But this is awesome. One thing that I really appreciate about Alex, and I don't like about when we see, and we talked about this in the HIMSS earnings call, when certain numbers and certain things disappear. Now, of course, Andrew was quick to show the slide that we're talking about that was missing. And we'll talk about HIMSS in just a minute. But there's been a refreshing level of transparency for Alex, just on Twitter and earnings calls. The state of PayPal was actually a lot worse than I expected when he got in. And it was very nice and very refreshing. So I do think, by the way, Sagig, in the investor day, there was a comment on that long term that they were looking at beyond buybacks of other ways to return shareholder value, which is code for dividend. I don't think that's happening probably in the next couple of years, but I do think that that's happening at some point here in the future. So I hope that it's like right now it's priced so cheap. When you can buy back nearly 10% of your float with just part of your free cash flow in a year, do that. Thank you very much. I appreciate it, guys. You guys are awesome. So PayPal, I don't think it's the opportunity that Robinhood was, where it's like you not only had obscene valuation. The valuation of Robinhood back in those days when it was like $8-9 is like if PayPal went to 50. Can PayPal go to 50? Very unlikely. But if it does, like that's the price that you're looking at. Now, right now, I think it's a no-brainer price if you wanted PayPal over the long term. The other thing that Robinhood had going for it was a lot of positive catalysts. I called it the golden confluence, that they had all these different factors that lined up, and it just made it an incredibly high probability play versus like PayPal. I think it's a very high probability play, but it doesn't have that immediate upside like Robinhood. And actually, even Alex mentioned that in the interview. So it has very high upside, but not if you're looking at it potentially. Like we don't know what the market's going to do, over the next 3 months. So yeah.
Very cool. All right. So dealer's choice, if we want to move to NVIDIA or HIMSS, or actually, maybe we want to do this as a stopgap, because I have a Robinhood related question for you that I'm hoping you can help answer for me.
Sure.
Let me find it.
And by the way, guys, if you follow us on Robinhood Weekly, I know that we've not had that for 2 weeks in a row. One was partly that they reported earnings, and they had the audacity to do it at the same time as Robinhood Weekly, or in the same day. Like,
how dare they?
Come on, just kidding. But there's been, some personal things and sickness and travel and stuff going on. So we hope to resume on Monday.
So my question to you, Roy, and maybe you covered this on the Robinhood Weekly, is Robinhood absolutely dead in the water? Because $64 billion asset manager Citadel to now offer crypto trading and become a liquidity provider for cryptocurrencies. Go.
No. There's already a lot of players. Like if Robinhood was like one of 4 players that offered a ramp for crypto, then yeah, it'd be like, oh man, that really stinks. Like the reality is, with rules that the SEC is likely to implement, and then there needs to be some regulation. We've talked about this before, that banks are going to get in that action. Yeah. The reality is too that with one of Robinhood's most recent acquisitions, they actually offer a way for institutions to end up buying directly, or even for banks, just like Galileo is able to do. I think Robinhood actually has an advantage here. They have a way for people to be able to use and have custody on their platform as well with their acquisition Bitstamp. So another player, even the size of Citadel, getting in the market, like I think that we're going to probably hit a crypto winter anyway this year. But reality is, it's an important piece of the Robinhood ecosystem. But no, that's outsized source of revenue this quarter, but it's very lumpy. And I think over the last year, I'd have to look. I had a post on this, but it was a meaningful part of their income. But as they continue to develop more products like futures, as they launch in the UK, they just acquired and finalized that acquisition with Trade PMR. They have more and more revenue streams. I believe they're at 9 or maybe 10 revenue streams that are $100 million or more at this time. So it's not as dependent on crypto as it was back in the prior crypto winter cycle. Now, crypto winter hits, that's more of a negative catalyst for Robinhood. The stock will go down some. It's not going to go down back to where it was before the bull market.
Right. All right. Let's now move on to NVIDIA.
Yeah. Let me pull up my. Well, one more post.
Yeah. This is what Tanner wanted us to talk about. I'm sure he covered it on his channel. At least I hope he did, because he's a real shareholder, not like us.
Yeah. Yeah. It's not. I don't know. It's maybe like 4% of my portfolio right now, but
We'll be covering. All right. All right.
okay. Go ahead and throw this up if you don't mind. So NVIDIA price action. This is after earnings, down almost 9%. Some of that was certainly due to just the whole market pulling back. You look at it year to date, it's down. 5 days, it's down. Even 1 year, yeah, it's up 50%, but it's been at these price levels actually many times. Now, the actual earnings for NVIDIA I thought were quite good. Nope, that's not it. There was a slowdown in basically profit margin, and a lot of that's that they're scaling Blackwell as quickly as possible, and that's causing some headwinds on margins, but that's not going to be a long-term thing. So I didn't see anything else that stood out to me as concerning. And then today we got more confirmation on this. So we'll start here. Sam Altman posted. Sam Altman buys a few GPUs, just one or two, from NVIDIA. And he came out and said, hey, ChatGPT, I didn't share my whole window. Hold on a second. Let me reshare that. I was like, what's going on? All right.
Do you smell burnt toast, right?
Burnt toast. I don't know what that reference is.
He's saying you're having a stroke. Anyways, continue.
Oh. So Sam Altman mentioned that ChatGPT 4.5 is ready. And then he mentioned that they're basically constrained by GPUs. So we've been growing a lot and are out of GPUs. We will add tens of thousands GPU next week and roll it out to the plus tier. Hundreds of thousands coming soon. Is that good news for NVIDIA? Yes. Yes, it is.
Yeah.
And Andrew Jassy, there's not enough chips and power to meet AI demand. Also today. And Meta, Mark Zuckerberg. Meta reportedly in talks to raise $35 billion for data center financing led by Apollo. Apparently, NVIDIA's revenue is drying up and everybody's buying chips from somebody else other than NVIDIA.
Yeah. So when do we start building a big NVIDIA position? Because I've been thinking about it and I wanted to see the earnings. And, I talked about this in previous bootlegs. I was like, hey, look, I'm in no rush to ape into anything because I'm at a point of, sitting on a lot of cash and I'm happy about it, especially, for the week that we just had. At what point is this too good to pass up for NVIDIA? Because it's at 120 right now and it bottomed at 113. And honestly, I thought after this earnings, it was going to, go back into the 140s, 150s, but
same. Yeah. SMCI, by the way, Cameron said it, good news for SMCI. I don't like the company because of the accounting things. They do have a real product and real monetary value. They're the number one performer in the S&P 500. So congratulations if you guys are owning that. You're doing quite well. But as far as NVIDIA, yeah, it bottomed in September 6th at $102, $98 on August 7th. Like even in the most dire, worst macro conditions, like barring something just absolutely outlandish, like another COVID like we had and everything shuts down. Mm-hmm. I mean, if it gets anywhere near 100, I'm going from DCA mode where I'm adding, a few shares here and there to I'm going to buy all the NVIDIA that I want to buy at that point, including if I need to sell out of something like Enphase is one of those. It's not on the cutting block. They had a great earnings, but it's one of those. I'm not sure when it's going to turn around and when the solar bull cycle will really accelerate. Energy demand is a real thing. We saw it there with Andrew Jassy's post. And there's going to be a lot of energy winners, including solar. Yeah, AVGO. There's a lot of winners from this. It's not just NVIDIA. But at that point, I'd probably just sell it at Enphase and just say, hey, Enphase is going to do well long term. I think it's to do really well at some point. But NVIDIA, it just becomes brainless around $100. But I'm going to be buying here if I continue to buy.
Dude, I think Broadcom needs to bounce right here, or it's going to fill that gap down to 183. I'm just saying, and that, I would be probably buying Broadcom again at that point. But yeah, NVIDIA at 120. Yes.
I think it's because the HIM CEO, his first name is Andrew as well, and that's just in my mind because we're going to talk HIMs in just a second. No, I'm not going to cut D. I'm not going to cut PayPal. So PayPal, I think of PayPal and actually NVIDIA, although they're very different companies, very different growth. They're priced and valued very differently as well. I don't think NVIDIA is going to do what it did over the last couple of years, where it goes up essentially 100% every single year, multiple hundreds of percent. I think it's going to perform quite well over the next 5-10 years. But that might be like 15% one year, it might be 50% another year, then 25%. So probably CAGR is probably around 35% or so. That's my estimates over that long, which is great. But so I'm a fan of a baseball team, the Texas Rangers. And when I was a kid, I loved them because my aunt brainwashed me by sending me baseball cards, and they were a lousy team. And how dare she do that? But what I found so fascinating is the entire team were just a whole bunch of sluggers that hit home runs and struck out a bunch. And so it was, true outcome type stuff where, they'd hit more dingers than anybody else. They have massive batting averages. And so they look really, really exciting. But the reality is they lost a lot of games, and they did finally win the World Series a couple of years ago, which is great. But when I was a kid, they were one of the worst teams in baseball. And so I have some positions. We have some positions in common that are those home run hitter, high risk. And I like having some of that. Like HIMS is one of those, frankly, where it's the most volatile name that I own. But I also like to have the guy that's able to get on base and win ball games. And that, I think, is NVIDIA, certainly. But that's also PayPal, I think, long term, even though, yes, it's a down year. It's a down few years for PayPal, honestly. But it's a very stable part of my portfolio, even though it doesn't feel like it with this sell off, at least right now.
Yeah. If you had to put your money in one of these two, who do you think is going to perform better over the next 5 years? And I want people in the chat to also answer this question. And I'll start a poll, actually. And I want Tanner specifically to also answer this question. You don't own either of these, and you have to buy one of them at these prices. Do you put your money in NVIDIA, or do you put your money in Amazon? Go.
Oh, they're going to do PayPal. I was like, PayPal easy.
No, but like they're both similar type market caps. Both, super, super great. Balance sheet. It's a more apples to apples profile than like a PayPal or something like SoFi that's like super small or whatever.
Yeah, I don't think that there's a bad answer here. I think both are great companies, and Amazon was one of those companies that, right with NVIDIA, I was considering for this 10th position. I only have 10 positions. I may consolidate down to 9, depending on how aggressive the sell-off is in phases on the cutting block, even though they did just fine. But yeah, NVIDIA. But Amazon is really good too. But I think PayPal will outperform both over the next 5 years. I'm very confident in that. Just valuation, 5-year plan. We see what they're guiding for. That's what I think anyway. Plus, if you're looking at that chart, it's a lot easier, especially given the valuation right now of them getting back to that all-time high, because it's a much smaller float.
Yeah. I think this is my answer. Booker's nailed it. I think if I can't wheel, then Amazon. If I can wheel, then NVIDIA, because the premium is too good to pass up.
Yeah. I mean, the one thing, if you really think that there's credible risk of China invading Taiwan, even though NVIDIA is not, they're going to get crushed. If
the entire market gets crushed if that happens.
Yeah, but them especially, it's not as bad as it would have been like 2 years ago for NVIDIA, but it's still really bad. If you think that, Amazon will absolutely outperform NVIDIA. Yep. Otherwise, it's tough to see NVIDIA not do really, really well. Now, 3 or 4 years out is a lot less certain. Like, we don't know what demand is going to be for the products. We don't know. There's a lot of unknowns. And I think maybe that's one of the things that the market is pricing in with NVIDIA right now. But they're not all about GPUs at this point. They're just not that same company that they were during COVID.
Dude, I told you this would start a lot of debate. Everybody, like, the poll has 31 votes right now, and it's like basically 50-50.
Yeah.
Like except for Elijah, who says Joby over everything.
Yeah, it clearly. I mean, there's a chance, but the thing that's hard for both of these companies, but especially for NVIDIA, is it is a $3 trillion company. Now, I do think that they will be. I think Sven said it, but it might have been somebody else. The first $10 trillion company. I think that's true. I don't think that's Apple, even though it is number one for market cap right now, which is ridiculous and stupid. And if you own Apple, congratulations, but it's not deserved.
I agree. I think if I had money in Apple and I had Apple as a trade, I made great money on Apple as a trade. I held it for like 6 months. But I'm in that camp right now where if you hold Apple, I think you would be much better suited in either NVIDIA or Amazon. Take your pick of the litter, or Meta, or literally probably anything else. Maybe even Joby, honestly. Not financial advice for obvious reasons, but not the biggest Apple fan right now. Roy, it is 8:07, which means we are 7 minutes late. Do you know what I'm talking about?
Yep. Advertising, guys. So we'll be right back.
Okay. The ones who have YouTube Premium, they got to not have a Robinhood or a Hims ad because that's apparently who advertises on my channel. And we will be talking about Hims, and then we will be wrapping up this show. But from now until the end of the show, if you guys want to submit your questions, I will bookmark them, and then we will do a rapid fire at the end, answering all of your questions that we can get to. If you do bribe us with money, you will be at the front of the line for questions. If you don't, just wait your turn. We'll try to get to as many of them as possible. Roy, what did you think about Hims, the earnings?
It was surprising in one aspect. It seemed like Andrew Dudum had lined things up with comments in Q3, comments after the shortage list showed that semaglutide was no longer on it, that they would really go hard after shifting a lot of that volume from 503B, that's a broad compounding pharmacy that they're able to do only during the shortage list. And I believe for the next, correct me if I'm wrong, 90 days, it might be 60 days. 90 days. After Q1, they won't be doing that. And they still will be doing a certain level of personalization for 503A when it's demonstrated as clinically necessary. But it sounds like that they're not trying to sketchily shift a whole lot of volume over to that. Now, we'll have to see how that actually plays out. And I think it was a sobering reminder for a lot of people in the market, like Hims is not all about weight loss. Weight loss is a big part. Of course, GLP-1 revenue really did increase quite a bit, which did impact margins a little bit too, just because it's not quite as high of a margin of product. And there will be some drag. But actually, the other thing that surprised me was that they guided for, I believe, $725 million of weight loss revenue in the year, despite GLP-1 semaglutide phasing out in Q1. Now they have, of course, their oral weight loss product, which sounds like it's scaling rapidly, and they see a lot of tailwinds as a result of that. And they also have liraglutide, which I think is not a very good product at all, but that is coming out, and they're able to personalize that in the second half of the year, maybe late first half of the year. But it's like, okay. And of course, they have the nutrition line, but that's not like a meaningful revenue segment. So I'm like, okay, how are they getting to 725? Now, the thing with Hims is they don't guide like super conservatively, but they hit. They hit and hit and hit, and rarely, if ever, do they miss. I think that they did miss EPS at one point, like a couple of years ago, but on revenue, they've never missed at all. And so I tend to trust them on those revenue projections. Like we don't know the breakdown as far as where oral is, but I think that's one of two reasons why the market sold off very aggressively, maybe three. I think there's a lot of traders when a stock goes up that much, it's kind of expected. Shorts probably piled back in after getting out in a mini short squeeze. That was definitely happening. Yep. And I think that people, including myself, scratched their head and said, how are they getting to 725 million in just weight loss alone? And of course, it was an overall pretty aggressive guide. What do you think, Tevis?
Yeah, echo all of that. It's crazy, man, because with Hims, and I feel this way very strongly, that in the quiet times, which is not very common for HIMS, but in the quiet times, like in between earnings reports, when this thing is flying up 100% in a month, I think to myself, oh, wow, like we might get into like bubbly-ish territory. But then they report these numbers, and then I do the math, and I think to myself, like, this is definitely not even close to being overvalued, given their growth rate, given what they're doing. It's funny, like Joseph Carlson, who is a YouTuber, and he does mostly like value stocks, like compounders, value plays. He even covered HIMS because, I mean, in his after hours channel, he's talking about like more stocks that are like in the zeitgeist. And I thought he was totally going to crap all over it, but then he said, "Hey, actually, if you look at their free cash flow, HIMS is not overvalued." And I was just like one of those like cartoons, like eyes popping out of my head. I was like, "What?" Like even he, as a value investor, doesn't see it as overvalued, and I can understand why, man. Because like you are guiding for 60 to 65% growth in revenue year over year, and I know that they're going to raise that guidance 3 more times this year, right?
Yeah.
And
Oh,
so
yeah.
you can see a world where they come in at like 75% plus in revenue, launch 3 new product lines, because menopause, testosterone, and liraglutide at the very, very minimum, have another couple of acquisitions, integrate Tribe Labs for the at-home testing facility, ramp up MedMatch where they get all of their AI data, and then they can increase that personalization aspect. And then you look at the weight loss segment and you say, okay, 725 million. And people are freaking out because they think this business is dead in the water because of semaglutide. And they literally gave you the playbook. I mean, look, here, I'll post it. Here, I made this post. And I said they guide for over 100% increase in the weight loss segment without GLP-1s. Oral weight loss only launched in Q4 of 2023. So it's only been around for 4 quarters. It did 100 million in revenue in 7 months. GLP-1s, which are what's going away, has only been around for 2 quarters and did 225 million in 2024 revenue. So this is super profitable, but this is super fast growing because it's not very expensive for users. The total users are about 200K. So they said we have about north of 200K users in 2024 is what they said. But like both of these products basically launched in 2024. So about 10% of the user base is in weight loss, which is oral plus GLP-1. And then they did about 1.2 billion in non-weight loss, which means about 300 million in weight loss because 1.5 billion was the total revenue. 225 million GLP-1, 75 million in oral. And you're thinking, okay, 300 million in total weight loss. And yet liraglutide is coming out at the end of the year. They need to migrate a portion of this existing 10% user base, which may be about 5% or 8% are GLP-1s, let's say, but probably closer to 5% because oral weight loss is so cheap that they probably have a high number of users there. It's just not very profitable. And then they can only compound GLP-1s until May 22nd. It's going to go away until the Q1. And yet, despite all of this, they put 725 million for weight loss guidance. Like that just is mind-boggling to me because that's over a double of what they did in 2024 without GLP-1s. But they're probably going to get like half of that guidance or close to in just Q1 off semaglutide because it's like continuing to ramp up, right? Especially after that Super Bowl advertisement. So I just think that the company is so primed, it's so primed for high growth that it's just such a no-brainer, right? Because you have this company that's like $9 billion and they're doing 2.5 billion in revenue for 2025. And they're growing probably 75% this year. Like, and they're profitable and they have $300 million in cash and they have no debt. Like, I don't know what overvalued looks like, but I don't think this is it, man.
Yeah, it's not like cheap like it was. There's a range between cheap and expensive, and that's where we are with HIMS honestly right now. The stock ran up so much, so hard, so fast, and I actually thought, I was wrong, but I thought that a lawsuit would drop, and so we got the shortage list ending, and I took some of my HIMs, I think 40% of my HIMs stock off the table. Now, part of the reason that motivated me to do that as well is I had very underwater covered calls. It was like, hey, I'm fine just letting this portion go at that valuation. And I think 100% gains on that, essentially. And I ended up buying half of that back at around $50. So we're not at $50. We're at 41 and some change, but I don't see it as expensive. It's, it's in the fair value range. Now, can it go lower than 41, 71? Yeah. Like I actually, that's where I'm kind of reserving my next buy is if we see under $35 a share, that's where I'm going to probably buy back most, if not all of the rest. And could we keep going back to like mid 20s, 25? Sure. $20? Absolutely. It's heavily shorted. It's very volatile. If everything is pulling back in the market, I mean, if you see, I will say, if you're interested in HIMs at all, if you believe in the thesis and you see it fall into the teens, you should think about buying there. If you like HIMs, you should think about buying a lot. Tevis, I'm going to have to think about what to sell, not just stocks. I've got 3 kids. Maybe I can sell one of them,
Yeah.
extra vehicle. I don't need this house.
Yeah.
But that price, like I don't think that we see this.
Yeah.
If we see teens and HIMs, that price is riskier than Robinhood at like $8, $9, $10.
Oh,
but
man.
It feels a lot like that as far as upside catalysts. So
it's wild. Like I talk about, so here's the thing. Content for me, and I suspect for you too, is not, what puts food on the table. It's not what keeps the lights on. It's something that I do when I come back, from work. I'm exhausted and I just talk with you guys because I enjoy doing it. And when I post on X, it's because I enjoy doing it. And I'm not like, I've never run an affiliate or a partnership or anything like that on this channel. And the funny part is, I got people messaging me being like, hey, have you sold out of SoFi? And I realized I haven't posted anything about SoFi in like over 2 weeks. And every single post I made has been HIMS related. And it's simply because I'm just way more excited about that story right now than I am about because there's so much more news that's going on there. And I think that to me is like signal around what I should be putting more money to, because I'm already subconsciously or consciously putting way more mind share to.
Yeah, I found that works well for me when I am very, very focused and excited about a company. Not stock price action is one thing, and I've learned to like not be excited or depressed like if it's going up or down. And that took some work. That took some time. That didn't happen when I was a brand new investor. But with something like HIMS, I'm just like so focused and fascinated on that. Or Robinhood, I'm like, man, this is versus something like Enphase. It's a great company, great product. I think it's going to do well long term. If HIMS falls into like the teens, I don't think that's happening. Enphase is gone. Like I won't be holding that. Absara won't be holding that. I'll sell Palantir to own HIMS at that point. Not all of Palantir, but a good chunk of it. I'll sell SoFi. Like there's nothing off the table. HIMS would become my largest position overnight, barring some weird catalyst like Anthony Dudum is doing like child trafficking or something. It's like, okay, it deserves to be in the teens, and that's horrible, and I'm not going to invest in that. But bar anything like that, no. But normal reasons is like, yes, it's a no-brainer price for me. And I was too new in HIMS to kind of recognize that opportunity when it initially fell, but I did buy in heavy instead of like doing a DCA, which I normally do with new positions. Like NVDA, I'm doing that right now. When it was 17 and I was convinced, it was 13 previously. I'm like, well, it ran up some, but I'm buying in a good chunk of shares right then. And I kept adding as I got more net new funds, as you like to say.
So I have, and thank you, Elijah, for honestly, man, accountability partner right here. And I freaking love it. Hit that thumbs up. And yeah, so I think on HIMS, it's been like, aside from the cash secured puts I did on Tesla today, I only have cash secured puts on SoFi and on HIMS. And for HIMS, like I was telling this to a friend and he was like, dude, you're absolutely effed. And okay, so I'll share it. But I wrote cash secured puts in equal amounts at 60, 50, and 40. And the total premium I collected was around 14, 15 bucks. And I was like, dude, like, I'm not effed at all, because if all three of those tranches hit, I get a cost basis that's 50. But when you subtract the premiums, it's like 35. And so I'm writing stuff that's at the money or in the money for him, because number one, this thing's volatile as hell. And, it can definitely not get hit. Like, we could go to freaking 50 tomorrow by end of day. I wouldn't even be surprised, when it comes to HIMS. Or we could be at 35 tomorrow by end of day. Like, I don't know. But either way, what I told my friend was like, hey, look, I'm doing smaller tranches right now. Like, I'm just doing batches of 5. And I said, look, the moment that this thing falls in the mid 30s, I'm going to start doing batches of 10. And the moment it keeps falling more than that, then I'm going to start selling shit and just buying way more, like just on the open market, and leaps as well. Same thing, right? Because if you spot an opportunity, like I don't know, man, like I want to be concentrated in things that I have high conviction in, and things that dominate mind share for me. And like I've repeated this in the past about SoFi, and I still feel that way about SoFi. Don't get me wrong. They're just different speeds, like one's ice hockey, the other one's figure skating almost. Like they're both played on ice. They're just completely different sports.
Let me ask you a hard question. If HIMS fell, let's use an extreme example. It fell to that most recent low at 13 something. Would you sell some, not all, but some SoFi?
Yes.
Allocating to HIMS?
1,000%.
Yeah.
Easy. Yeah, easy. Because it's like, okay, so if HIMS fell to 13%, HIMS has already gone to 70. You know what I'm saying? Like, it's already done. It's already broken all of the resistance levels all the way up until 70. SoFi, when was the last time SoFi hit 30 or 40? Never. Right? Like, they're just different sports. I don't know how to explain it. Like, TJ has this good analogy about like, horse racing, and they're just different horses. Okay. Would you sell Joe? This is a tough question, Skittles. I don't know about this.
Would you short sell JOBY to buy HIMS? Maybe.
Are you a HIMS customer? If so, what are their best Bernie, I have the privilege of being 30 and not really being in that target demographic for HIMS, at least not for another couple of years.
And I likewise, like there's only really one product that I think I'd really benefit from, and that's the weight loss. Like I can honestly lose some weight. GLP-1s, I don't think that I would want to do, even if it was, inexpensive and cheap and not going away. Liraglutide, by the way, I think I wouldn't say terrible product. It's not a good product at all. So don't get too excited about that one. Now they can compound it and personalize it. It'll be okay for them, especially because it's a lower price point. But the oral solution, like I've thought about, like, maybe at some point I'll try that, partly because I think that I stand to benefit from it, and partly because I'm a HIMS shareholder. It'll help me have a little bit better insight as far as that whole supply chain, how that all works. I played around with it up to the point of buying it when I was doing my initial research into HIMS. And I'm like, maybe at some point. But yeah, everything else. By the way, there's 2 other products. Like, HIMS is not all about weight loss. There's a lot of other products go on their website. But 2 that are coming out that are really exciting are specifically targeting menopause, which is a big issue with a lot of hormonal issues that women go through, and also testosterone. And they have an oral testosterone product that's coming out as well. And so those are going to be very, very good for HIMS.
Absolutely. And like, keep in mind, the cross-selling flywheel here through personalization is very important to the value proposition of that business. And one thing I want to also bring up, Matt, the HERS product, man, the HERS product was 30% of the total Q4 revenue. Like, that brand is ramping up insanely quickly, to the point where management has said repeatedly that they think the HERS product will be even larger than the HIMS brand.
Yeah.
It's crazy.
And I don't know, that the HERS brand actually seems a little bit more sticky as far as those products. And it seems like the cross-sell is working well. Yeah, it was different than I expected as far as guidance and as far as that plan forward with semaglutide. They were more aggressive with guidance, and it did not shock me that it sold off either way. Like it just, when a stock runs that hard in earnings, and then the shortage listing happened, that's kind of to be expected. I actually, I came out with that video research on 503A, 503B, personalization, all that stuff. And I'm actually glad that they're not going that route, because then the whole focus on HIMSS would not be all these other great products and that flywheel and the personalization that they have. It would be all about GLP-1s and the lawsuit, which is going to take years and may not work out. Like I was skeptical if that would work out long term for HIMSS. I thought that maybe they would be able to convince and show that there's some need for clinical necessity, but it seems like that they've arrived at that they're saying, hey, there is some level of personalization we can do with some clinically necessary 503A semaglutide applications, but it's a small amount of their overall revenue. So yeah, we'll have to see. I also think that they're going to cross-sell. They have all these members that are on there with GLP-1s, and they will be, contacting them and saying, hey, this is the reality, that this is going away. Although I did see some interesting posts on that. But they'll let them know, like, it's available at these places, but they can also they can also let them know, like, if you don't have insurance that covers this, we have this oral product, which is really good. It's not as good as GLP-1s as far as efficacy, but boy, is it inexpensive. Doesn't require insurance. You don't have to shoot yourself with the needle. And it seems like it's working for a lot of people. So I think that they'll have a lot of people that actually stick with HIMSS just because they're like, hey, I don't have insurance and I'm not going to pay, $1,000 something bucks a month, even as well as GLP-1s might be working for them. There's also a lot of nasty side effects with those. So we'll see.
Yeah. 1,000% agree. I don't know. I'm super excited about the prospects of the business going forward. And it's just the total addressable market absolutely does not coincide with the market cap of this business, especially when you extrapolate out 5 to 10 years. It's a no-brainer for me. And I still think in the grand scheme of things, like, we're super early in that story, regardless of how much it's already run. And I say that knowing that it can absolutely fall another 50%.
Yeah. Can you throw up Bernie's comment from just a couple of minutes ago? 727. I think it's a good, Peter Lynch, famously said, that's one of the retail's advantage is that we are very close to a lot of products that are business to consumer products. And if you know the product, if you use it, if you like it, that gives you an advantage over the street that may have no idea about it.
Yeah.
But I don't think that that's a universal rule. Like, one of those that I would not have invested in if I really applied that rigidly was Palantir, because they don't have a consumer-facing product. I got into Tesla, at a very good valuation, even with this drawback, despite not owning a Tesla at the time. I just knew that I wanted one. I'd been in the vehicle. I had a friend that owned a Tesla as well. No, I think it's very useful and it gives us an advantage, but I don't always use that as a hard rule. I don't insist for myself. Now, if it works well for you, Bernie, or anybody else, and I do think that overall that's a good plan of attack, but there are exceptions. I even got into SoFi before I could use it, but that's my main bank right now.
So I'll argue the other side, right? Like, yes, absolutely. The dumb money has an advantage over Wall Street because they are consumers of the products, but it's not necessarily like you yourself have to be. He's like, Peter Lynch was saying that in the context of how do you discover new stocks? You can do so if you are a consumer. One of his best investments, and I have to Google this to see if they were still around or not, was this company called Legs. If you guys read One Up on Wall Street, you would know this because he talks about it. It's basically like women's pantyhose. And the way he found this company was like his wife or his wife's friends were always talking about this. Like, he was not a consumer of that product. But the point is that he discovered the product first, and then he asked the question, is this company public? Let's look at their financials, so on and so forth. So I think the buy what you know is really something to start at the product level and then build your way up to the financials, because Wall Street is doing it completely backwards. They're starting at the balance sheet, the income statement, and then they're going down to like what makes that product special. So I don't know, little history lesson, but read the book. Great book.
Yeah. He's worth, if you only listen to one investor as a retail investor, Peter Lynch.
Yeah, definitely my favorite investor out there. Just because it's so relatable, like his style of investing. It's not overly convoluted with like financial, you know, metrics or whatnot. I don't know what Tanner's saying. Okay.
So why don't we run one 30-minute ad since Tanner is there? We want to hit them with an ad, although he might have YouTube Premium, and then we're going to answer all the questions.
Sure.
Rapid mode. Jose, I think you might be at top of the list, or at least you're close.
Definitely top of the
we'll
list.
see you guys in 30 seconds.
Okay. Let's go to Jose first.
Well, we'll wait. We'll wait 30 seconds. I can't remember.
They can always rewind, bro.
Okay. So Jose, if you're watching it now, yeah, it's your question. So I thought it was a good question. I was also asked this on Twitter recently too. I am honestly surprised to see PayPal as a stock where it's at. Part of it is that broader pullback. I wouldn't appreciate doing that here at $70, even though I think it's a no-brainer price, for me as an investor, but I'm not taking on debt. So it's really a question on my mind of like, I don't use margin other than the $3,000 margin that Robinhood lets me play with. But where would I actually be comfortable on taking on debt to buy PayPal? For me personally, I still wouldn't do it, but if PayPal hit $50 a share, which is their recent low, like they hadn't been that since like 15 years ago, although they did hit like right around there previously before they started the run up, especially given where their buybacks are, their free cash flow, the products that they're developing, the team that they've assembled. My goodness, at $50, I would be like, it makes sense. I still wouldn't be super excited about it. I just don't like those kind of games. Don't mind buybacks, but like actually going into debt to leverage buybacks, especially right now where it's not cheap to borrow money, not my favorite thing. Also, PayPal is able to loan out based on that cash balance. So that does hinder some actual operational activity as a result. So not my favorite thing, but if they do it at 50, fine.
Yeah.
And I'll go quicker in the future, but that one deserved a long answer.
Okay, let's take a look here at these questions. By the way, check on the poll. 86 votes, Roy. Guess what the ranking is, Amazon or NVIDIA?
I'm guessing Amazon based on the comments.
It is exactly 50-50. Like, on the nose, 50-50.
So JOBY wins then.
So JOBY wins by default. Exactly. Okay, let's take a look at the next question. Would you still buy a Tesla today?
A Tesla, yes. Yeah, we actually got an fender bender, and it's going into the shop on Monday, and it looks minor. It doesn't seem that it's that severe or anything, but Tesla basically communicated like it's close and there's not much to play with. So if they go in and they find some other issues, our car will be totaled, and the next car we buy is a Tesla.
Yep. And yes, for me, I think I've made this point very clear if you've seen multiple of my streams that I will absolutely let the best product in the market win, regardless of what the CEO thinks. Do you know what the CEO of Ford's opinion is on politics? Probably not, but if you like the product, you'll buy it anyways.
Yeah, and it's not true for everybody, but it's the best vehicle out there for me. It just is. There's nothing close.
Will HIMS get into insulin or diabetes?
I don't remember that on the product list, but there's some products that they have not rolled out, maybe at some point. Was there anything on the roadmap anytime recently soon?
So I'll pull up the shareholder letter, and here you can see, but I don't think they have mentioned anything. I think they've mentioned diabetes before, but actually, let me see. Hold on. All right, so let's pull this up together, and then this can answer your question.
Yeah, page 7.
7.
One more. There you go.
Weight loss. Yeah, so you have diabetes here. You don't know what. I mean, we don't really have a timeline as to when these products are going to come out. We only have a timeline for these two in 2025. Of course, liraglutide is also going to be here, but that's not listed out as a specific vertical within the weight loss segment. So I would imagine the other one that they talked about, Roy, and I don't think we really have talked about it before, is sleep. So they did mention sleep a couple of times. Sterile and recently acquired lab capabilities set the foundation for future entry into additional conditions such as sleep, low testosterone, menopause support. I found that funny how this was included in the same sentence because we know these other two are coming in 2025, whereas sleep is something that they haven't really talked about very much, like front and center in the past. So if I were to guess some type of order, I would say that's probably the next one up after testosterone, menopause, and liraglutide this year. Probably a 2026 thing, maybe late 2025. But diabetes is on the list. It's just we don't know exactly, when that's going to be actually coming. So yes,
yeah, we'll have to see what that product is. Like we don't know, but I do remember when I took that weight loss survey that they have you do at the beginning. They talk about the importance of diet, and they have some tools that you can use that are basically free, I think, and also sleep. And so it would be one of those easy flywheel things that and they have a lot of weight loss product users. They're like, hey, one thing that can really help you is getting a good night's sleep. Here's a bunch of tips. If you need a little extra help, here's our melatonin formula that's, who knows? Like I'm just making things up, but whatever it is. If it actually helps people get quality REM, like that's great. That's a big issue for a lot of people.
Yep. Next question, Elijah. I know Matt told you about Rocket Lab a while ago. Is there a price you would consider adding? Elijah does also have his own YouTube channel. I don't know if people here are aware. So let me just shout that out for a second. So this is his YouTube channel. Growing number of subscribers. So definitely check him out. I don't know if you talk about Rocket Lab or not, but I know you talk about him because I've seen some of those videos in the past. In terms of Rocket Lab, look, I think, and this is what I told Matt in our DMs. I said, you've earned, and Roy has one too. I said, you've earned one free token for me to buy one stock, whatever you say, and like blindly follow your due diligence. Obviously, I'm going to do my own. I'm not going to like ape into a major position. But like for Hood, for example, it is now like 0.5% of my total portfolio, or like 0.4%, something like that. And that is entirely because of Roy. I didn't buy at 14, but same thing with Rocket Lab. Rocket Lab's down to like $17 or something right now. And if Matt is saying, hey, I'm putting 200 grand or 300 grand into Rocket Lab, I will say, yeah, sure, I'll listen this time around because I was kind of foolish the first time around, because when you surround yourselves with smart people, listen to them.
Yeah, and I did DD finally into Rocket Lab when it was like $3 or $4, and Matt's like, "Hey, now's the time to really start paying attention." And I was like, and I just put OK on Twitter, and I messaged him. I was like, "Hey, I'm actually looking into it, and I'll let you know if I have questions." The thesis was clear. I really liked it. Problem is, just, I didn't do the invest then investigate thing. I might have lost a little money, might have gained. They ran up to like $7, $8. I'm like, well, I'll wait for a pullback, but I see the thesis. Dumb. Because it went to 30 something bucks. Now, right now it's at 19 and some change. No, 17, 32 after hours. My goodness.
They just had earnings, I think, after hours today, if I'm not mistaken.
Yeah, they don't make a lot of this is speculation, and it's a speculative company, but it's clear that they're positioned very well in this industry. I like Peter Beck. I think that he's an incredible leader, visionary, and honestly, like, I hate to say it, but brand damage is a thing that's also impacted SpaceX, and it benefits Rocket Lab. Now, they're not the same as SpaceX. I think SpaceX is, like, if I had to pick between the two, even amounts of money, I'd do SpaceX. But Rocket Lab's really interesting. And so I don't know what price I would be getting into it, but I'm interested. I need to put that back on the radar. So thank you for that question.
Yeah, absolutely. I'm in the exact same boat. Does your channel monetize on YouTube Premium? I think it does. So if they have premium, they don't watch the ad, but we get the 12 cents or whatever they pay us as though they would have watched the ad. Okay, let's see. Roy, here's a fun one for you. Hims at 10 versus SoFi at 4 versus Palantir at 30. Which would you buy? You can only pick one. Let's just say 5-period holding time, or maybe 5 versus 10 if it changes, and why.
Let's just do 5. Keep it simple.
Sure.
Oh, that's super hard, dude. Probably Palantir at 30.
Yeah, but like you already know where Palantir went. So it's kind of you're kind of biased because you can do the mental math to say, okay, well, 30, it went to 125. I mean, it's back to 80 now, but
all of that's hard. Like those are like, if any of those happened, like that would be like the 90% of my portfolio in that.
Yeah. And if any of these, I think, were to happen, minus the Palantir, I think one, but maybe now with the government contracts, honestly.
So well, Beck, you didn't answer. So Palantir would be number 1 for me. Hims would be my second choice. SoFi at 4 would be third. All of them are no-brainers. Tevis?
I would say the order that Sagig has them listed. So I'd say Hims first, SoFi second, Palantir third.
Palantir third.
Well,
I guess you sold lower than 30, so maybe you're waiting to get.
I mean, look, man, just look at the growth rates that they're doing.
37%?
It's at 37 now?
Yeah.
Jeez.
They guided for 31.
Wow.
For the year.
That's very impressive.
And I think that they'll beat it. I think that they'll come in around 35 to 38, depending on what happens with those government contracts. But like, it's just, I won't say it. But
I haven't really looked at a lot of Palantir report. Like when I sold Palantir, they were at 13% growth.
Yeah.
So that's like still the numbers that I have fresh in my head. But I have to take a look at it again.
They are an absolute unicorn. I would not buy them, even though they pulled back a lot here. Even if I didn't own any, I don't know that I'd buy any Palantir. Maybe start nibbling. I don't know.
Yeah.
At 30, dude, if it falls to 30, you gotta buy some freaking Palantir. You got to.
Yeah.
I'm gonna make you. I'm gonna come to Canada and like take your finger and stick it on the buy button, and you're just gonna have to get it.
That's your freebie, bro. You can just pull the veto. Be like, nope, you're buying it, and I will.
All right. That's fair enough.
Hey guys, gosh, would have gotten here earlier. On June.
Appreciate you, June.
June's great. Thoughts on new and grab? Any one of you hold this? I only have new leaps. I don't have grab at all. But yeah, I think the new leaps are fine, I guess. I'm not super excited about either. Simply like new got crushed on currency, and that's just another layer that you have to think about with this company. But the growth rates kind of make that headache okay to have, if that makes sense.
Yeah, it was a 50% headwind to their year-over-year growth,
Yep.
which is insane. Like that doesn't happen in a normal environment at all. I think it's a one-off type thing. The company itself is great. I own new. I've added to new. I own leaps and also shares. I'm not interested in grab.
Tevis, I think you might be the only Canadian looking to buy a Tesla. I do not want those tariffs. Yeah, dude, I wouldn't buy a Tesla if it had 100% tariffs on it. I'm not a freaking idiot.
Buy it in the U.S. You drive it. Oh no, that's.
I just think it's a superior product offering, man. Like, tell me another car that has software to the degree that Tesla does. I'll wait.
Yeah.
Yeah, like sleep. I'm not really imagining melatonin. I'm imagining something where like you have chronic sleep apnea, or no, not apnea. What's the one where like insomnia? Where, yeah, I would imagine something like that, which is way more intense than like I have melatonin in my cupboard,
You know what the product might actually be is, and maybe that's why they're uncertain on. They don't say when they're going to release it. Is I'm working on my dissertation and hoping to defend late this year. And so once that's released, that's public, they can just buy it and then give that to people, cheap money, sell it for a couple of bucks. That'll put people right to sleep. So.
Yep. Are you guys pro-tariff or anti-tariff? I would end. President Bernie, actually, that doesn't have a good ring to it. President Bernie would end all tariffs on day one.
Yeah, I agree. I think that there is an argument for very, very select, very targeted tariffs, but overall, like if you had to choose between what we have now and no tariffs, no tariffs.
Um, yeah, like again, it depends on tariffs are just a tool. It's just what are you trying to achieve through the use of tariffs. Like one thing in product management that I always have to do is people always default to solutions instead of problems. It's just a natural, human psychology thing to do. I'll highlight a problem and immediately like you'll jump to problem solving mode. And one thing that we have to correct for in product management is we have to highlight and identify the correct problem and ignore the user's proposed solutions because they don't have a full lens of what they're trying to achieve. And that's probably the same approach I would take here to say, okay, what is the desired outcome of tariffs? And then let's look at the entire board and what moves can we make on that board to get us that same result? Like is tariffs the only thing that will get us that result or not? And so again, it depends on what you're trying to achieve because there's different uses for different tools in your toolbox. Matt said today in his stream that he's DCAing bi-weekly and he bought more today. Yeah, I mean, Matt is a very smart man.
That's one of the best things to do with a company that you want more of, and you're just like, I'm not sure where the dip is, but it's enough of a dip. Like I'm doing that with Robinhood, but I'm buying weekly. NVDA too, but that's because it's a new position.
Thoughts on Canadian REITs? They look very undervalued. Yeah, they're probably undervalued because they have no real value. I would rather put my money into things that yield higher returns.
I don't know anything about that, so
yeah. But look, I think there is a case to be made to say that if, as a result of the election, you'll have a lot more deregulation to spur domestic investment, then I think real estate can be a smart play. I just think it's way too early for that because there's too many unknowns from now until then.
Keep an eye on your yield in the United States, at least, if you're interested in United States REITs.
Yeah. Okay, let's continue here. I would pay more than 10 cents. Yeah, we love you, June. Palantir at 30.
I mean, all those companies. That was a tough question because all of them are just ridiculous.
Okay. I'm like so behind in the chat because I'm trying to get to people's questions and make sure we don't skip people. Yeah, again, I think we're on the same page here. Let me go. Thoughts on Wise? I don't know.
I don't know as far as an investment. It's a good product. There are some headwinds against it, and one of those actually is PayPal. PayPal Zoom. But there's a lot of companies. I know Wise is branching out. I don't know their new products. I just know their main product, which is the international remittances.
Yeah.
And there's just so many people and so many companies, especially in emerging markets, that are developing that. I just look at what they're doing as far as new products. And if you find that credible, maybe it's a good investment. If you're banking on those international remittances, don't.
Yeah, it's the same questions we get every single freaking time, bro. Every single stream we've had Hood versus Hims. Like, I think we've answered this a bunch of times, so I'm just not going to get into it for the sake of time.
Both.
Yeah, both.
Did you buy more Robinhood since your initial buy?
No, I haven't, because the problem is that everything falls at once, Roy. And so I'm like, okay, well, what do I buy?
You need more conviction in Robinhood. We need to do a Robinhood weekly and just like talk directly to you. I made a post. I'm going to show you this post. Give me 1 second to find it. You can pull up the next question.
There's political questions. Skittles, good try. I'm not going to answer it. Trying to get me in trouble.
So throw this up, Tevis. This was actually, I didn't tag you.
You should have.
I said Robinhood is trading at a 32 PE and grew 100% year over year. If you're waiting for a sell, this is it. Guess what? We're not much above that. Tevis.
Look, man, I know you're saying this for your own benefit. You want me to buy so it falls more so you can buy more. Okay? Because the last time I literally bought the top for you.
Oh, yeah, but absolutely. But I also know long term, you can't stop it long term. It's too strong. they just have so much going for them. They're very cyclical. If this dip continues, like they tanked a lot from where they were at. I was DCing at 60. I'm DCing more aggressively now. Man, look for that opportunity. Like put it on the radar. Like I need to do with Rocket Lab. So,
Yep. Thoughts on Lemonade? Honestly, I am bullish on Lemonade. It is not a large position by any. It's larger than Robinhood, honestly, which I don't know. Like, I'm sure if I got into it specifically, like Robinhood has a higher growth rate, but at the same time, Lemonade is much smaller in terms of market cap. Lemonade is only a $2.5 billion market cap. It's small. The thing with Lemonade, and they just reported earnings earlier this week, they're actually up over 12% today. Is look at these trend lines here for Lemonade. They're not profitable right now, but they will be profitable by the end of this year. They'll have their first profitable quarter, and everything is rising for Lemonade. 2.4 million total customers. A lot of their growth right now is in terms of operating leverage. So there's a lot of stuff that there is to love for Lemonade. They're leveraging AI. I posted earlier, maybe last week, around one of their chatbot experiences leveraging AI. There's a ton of stuff that Lemonade is doing in a smarter way, and that's going to translate to profitability probably by the end of 2024, or sorry, by the end of 2025. And their first profitable full year is going to be 2026. And we know that good things happen to companies that go through that trend. I mean, look at SoFi, look at Robinhood, look at Palantir, look at HIMS. Good things happen to companies after they post 4 consecutive quarters of profitability. So I think in the Lemonade story, we're very early. But I think that the market is going to wake up to see Lemonade's potential over the course of this year. And this is why it was my second pick to give to Chris behind HIMS. Okay. Let's see. We're going to wrap up fairly soon because we've been here for about 2 hours. Did you guys buy the dip? Yes.
No, but yeah.
This is very compelling. Kelly is literally made of money. I see her buys like $4,000, $5,000 on basically a daily basis. I'm not balling like Kelly is balling, but yeah, Kelly, I will do this deal with you. I will buy more Hood if you buy more HIMS, and that's simply because I am bullish on HIMS, and you are my friend, and I want you to win alongside myself and Roy, and also Tanner to some degree, $100 worth.
To some degree. Plus, you Canadians need to stay together. So
exactly. Okay. What else, man? Yes, Lemonade is out of Israel. The other thing is that their chief product officer, this guy called Shai Winiger, he is the chief product officer or co-founder for Fiverr as well. So you should look that up. Their chief product officer also co-founded Fiverr, I believe, or he was definitely involved at Fiverr at the executive level. So that's kind of cool. 2 publicly traded companies for that one person. I follow him on X. He's great. He posts a lot about just product stuff, which just scratches that part of my brain. Okay. And that's exactly how I found Lemonade, by the way, because I was following him on LinkedIn for product, related reasons, because it's my career. And then I saw he was involved in Fiverr and in Lemonade. And I said, wow, what are the chances? 2 great product offerings, because I used, Fiverr in the past, and Lemonade looked really cool. What is this? Yeah, we're not answering this, man. Roy is going to have stalkers if he gives out this number, and you guys realize that I am not the billionaire in the group. It is actually Roy.
Tevis is a trillionaire, actually. He's the richest man in the world. I did see an earlier question. I don't know who asked it about Google, saying that it's a cheap, juicy valuation. What do we think on it? I'm not bullish on Google. I'm not bearish either. Last year I was bearish. I'm neutral, but it is attractive at the current valuation. I don't love leadership. I don't love the culture. We've talked about that before. But there's a lot going well for Google too. And it's cheap right now, but I'm not going to buy it.
Yes, it is definitely cheap for sure. But I'd rather buy either Amazon or NVIDIA because both of those seem cheap as well compared to their growth.
And Duolingo. Gurjap's Sarai said, Chris has been screaming about Duolingo for like a year. Do you guys have positions? We don't. That's one that if I'd done the Peter Lynch method, like my kids love Duolingo. I even was using Duolingo during COVID.
They're so good.
I didn't even think of it as a publicly traded company. And I was like, oh man.
Dude, look here, I'll throw something up for Duolingo. We might get demonetized for this. Is that okay?
Yeah, I guess so. We'll run another ad on top of it. Just kidding.
Well, I mean, demonetized. Anyways, I'll play it without volume. But basically, Duolingo posted this on X, and
it's weird.
It was amazing. They did this entire campaign around like the owl dying, and now they posted saying, "Faking my death was a test, and you all passed." And it has like this owl resurrecting. Which is fantastic. This is just there's a story arc to their viral marketing. And then
it was Death by Cybertruck.
And dude, it was amazing. Yeah, Death by Cybertruck, but they also like had all of these other posts. Like they posted around what was it? They were talking shit about Drake. Like literally the Duolingo owl was talking shit about Drake. And then I saw this comment. They even updated their app icon logo too. Like this is how committed they are to their marketing. It's unlike anything I've ever seen before. Totally amazing from a product perspective. And it just makes it super fun. Yes, super addictive.
Yeah.
It's just one of those names. Okay. Archer. I mean, we don't really cover Archer.
I'm not into eVTOLs. I don't think that's a great long-term investment. If I did, Archer would be what I'd pick.
just more Joby hate. We were talking about Joby earnings at the start of this podcast, so it's only right that we end the stream talking about Archer.
So, I mean, like, it's not just Joby hate in that case. Like, I don't know very much about Joby. Archer, I looked into when they announced a partnership, or Palantir announced a partnership with them. I don't remember which way it was. Yeah. I'm like, hey, this is a really cool company. I liked it better than Lilium. Lilium, I think, is bankrupt now and out of business. Also partnered with Palantir. So there's no guarantees from that. But, yeah, I just thought that it was – I'm just not going to invest in eVTOLs. I'm just not interested.
Yeah. I am absolutely not famous in Canada, but I'm glad you think I am. Actually, I did get recognized once way back by some guy that lives in my building. And so that's kind of fun because now I see him in the elevators. And he's like, hey, I see you. And I'm like, okay, it's great. But aside from that, no.
Yeah, Booker's has a good point there. Politicians are an Archer.
Yes.
It shouldn't be a thing, but there is kind of insider trading with politicians. When you see them pile into certain companies, and one of those right now is Palantir, by the way, you should pay attention. If you're interested in that company, it usually means good things. Travis.
Good try, Ryan. Rip. Why aren't we talking about Meta? Don't like it. I love Meta, honestly. Like, I think Meta is probably, other than Amazon, Meta is like the one that's going to be most like. Zuck's commentary on the last earnings call made me so incredibly bullish on Meta, and just the experiments that they're running internally. You know, I think they're going to do very, very well. I was priced out of Meta like $400 ago.
Yeah, I think it's a great company. I think Zuck is a great CEO. I've always said that. I've warmed up to him. I still won't say that I like him, love him, whatever. I used to just have absolute disdain for the guy. But I view the core product as Meta still as a social media, both Instagram and Facebook. And I think overall that those are damaging to our society, just the way that they're done, run, the way the algorithms work. Less so now that censorship seems to be being removed, but I'm just not going to invest in a company that I view as damaging to society. So another one, and you might say that about Palantirs or HIMS or some of my investments, that's fine. But where I personally see societal damage, I'm not going to invest. So Philip Morris is another one. Should people be able to smoke if they want to? Absolutely. I'm just not going to invest my money in that. I would not invest Meta. I was, when Meta was like $180, it wasn't at the bottom, but I was like, okay, I see why people are buying. This stock is going places. I'm still not going to buy it. And I know some people have different mentalities on it. They're like, hey, money is money, and I'm glad to make it wherever. But that's just not how I do it.
Yeah, bro. And I'm pretty sure if you say Philip Morris 3 times quickly, Steve will pop up in the chat telling you to buy Altria instead.
Oh, goodness.
So, but yeah, like, again, I don't, if that was my investing style where I just bought mega caps and just chilled, you would have much, much, much less content from me, but I would probably be much, much, much richer than I actually am, because mega caps have performed great and they're terrific stores of capital. It's refreshing to watch and listen to you two talk without Tanner taking 90% of the talk time.
And yet Tanner still makes us start late. I don't know how that works, but
Yeah.
he does.
Yeah. Elijah wants to join the HIMS weekly one day. You're always welcome. This comment I'll answer like that. And I think we'll wrap it up there. Roy, what do you think? Is there anything else that we wanted to throw up on the screen? Let me see.
Yeah, we'll try to test the water, see if we can get Bootleg back to earlier in the week. So you may have an episode sooner rather than later. Be sure to look for that interview with Alex Chris dropping tomorrow at 11 a.m. Eastern time. Don't have it scheduled yet. Got to do some editing, but that's the plan. And of course, we have SoFi Weekly tomorrow. So you'll get to hear from the amazing Tanner and Tevis, and I'll be there too. So
I think one of those are all good news that you guys should look out for. I think one of the not so good news is that we're still going to try to make it work, but I think HIMS Weekly is going to be struggling a little bit because I have a much more rigorous commitment from actual work. And the problem is Manuel is in a different time zone. So we're really limited in terms of times that we can make work, but I got to connect with him and see, what we can do on that side, because I really want to keep HIMS Weekly going further. But yeah, okay. We will let you guys know. Thank you so much for being here, and we will see you very shortly.